Hello, this is Robert. I'm a tax attorney here at TRP, and we're going to be going over tax relief, how to get it from start to finish, which methods you need to go through, and then we're going to provide links below to the guides on how to do it yourself. So, finalized debt, or is the debt still not finalized? This is the first thing to look at. If you have a finalized debt, you're going to be going one route. If you have a not finalized debt, you're going to be going the other route. And by finalized debt, I mean the balance is already set, you know what it is. And a debt not finalized is, are you getting audited, or is there a CP 2000 notice that's trying to add some income and you're supposed to be sending responses and that kind of thing. So first we're going to go over tax relief for finalized debts, which is what most people are probably looking for and the more complex one. So offer and compromise is the best option in most cases. When the debt is not in dispute, there are the following tax relief options: offer and compromise, currently not collectible, payment plan, or pay in full. So offer and compromise works when assets and income are low compared to the debt total. If you got more assets than the tax debt, most of the time it's not going to be an offer and compromise. Sometimes you can get around that if you can say it's land that's needed for income, stuff like that. We've had properties that were not able to be sold and have it accepted. And I'll tell you that in those cases, it has to be appealed, is what has happened so far. Most of the time, the agent just doesn't approve that when it comes to some type of land or something that's worth more. When it comes to 401k balances, sometimes you'll have a small 401k. You could say, well, I need this for emergency expenses. And we had a case where the lady had about a little over $10,000 in there, and she still got an offer for $100. But I don't expect that, and you should expect what the calculation is, but sometimes offer less and ask for more. So currently not collectible status. This is tax relief when you got too much assets for offer and compromise. There's something else that will make you qualify for offer and compromise, like last year you made a ton of money and now you're not making money, and you're self-employed. That can disqualify you. Or you have really old debts. So when you got really old debts that are about to expire, you might not want to submit an offer and compromise, because submitting an offer and compromise is going to stop the collection statute that they have. And we'll have some information on that posted below. But for example, if I got a debt that's expiring, you got a debt that's expiring in 6 months, there's no point in submitting an offer and compromise. We submit the offer and compromise, good chance we're not going to get a response, in time. So, a finalized response. So it's going to be longer than 6 months, and the debt would have already expired. Now, the downside of doing that is you can't withdraw the lien when it expires. It'll get released, but not withdrawn. If you get an offer and compromise and it gets accepted, you can get the lien withdrawn like it was never there. But if it's a big amount of money and you're risking leaving it open, most people are going to choose non-collectible and let it expire. And we'll have more information on non-collectible and how to get that posted below. So payment plans. This is the easy way of tax relief. And I know some people, they find out later that their case was super easy after they paid a percentage of their balance to do it for them. That's part of the reason we just charge hourly for cases, because some of these are really easy. We're not going to try to charge you like large percentages of your debt just to be done with these. So less than $50,000, it's just going to be an easy payment plan over 72 months. Okay, so you paid over 72 months, there's no lien filed, and that's it. From $50,000 to $100,000, you can just put it in a payment plan for 84 months, and they do file a tax lien. However, once you then pay it down below $25,000, you can put it in a lower payment, put it in another payment plan, set up a lien withdrawal after 3 payments once it gets that low. Now, if it's over $100,000 or under $100,000, but you can't do the 72 or 84 month plan because you can't afford it, it's going to be technically the same type of process, which is you're going to have to submit a financial statement. And if it's assigned to a revenue officer, that's going to be Form 433A. That's usually when you owe a ton of money. If it's not assigned to a revenue officer, it's usually going to be Form 433F. And you go ahead, you fill those forms out the best you can, get all the paperwork together, and the amount that the form says you can pay at the end is generally what you're going to get, as long as you're entering in all the numbers correctly. Now, what we found is, usually when you have a case like this, there's always something else that can be added in there legally, or sometimes it can be arranged better. Most people that we've seen that were their cases where they started doing this themselves when we took it over, a lot of these cases we end up being able to turn it into a settlement by pushing everything in your favor that, of course, is legal, or adding an expense that you need anyway that you should have. But the benefit of some of these payment plans, which is similar to, like I mentioned in non-collectible, if the debt is close to expiring and it says you're going to be in a payment plan for $150 a month and it's going to be for 7 months and you owe $100,000, well, that might just be easier than dealing with an offer and compromise, and some people may prefer that. So a payment plan that is based on a financial statement sometimes ends up being a reverse offer and compromise of sorts, because you end up paying less than you owe. So in most payment plan cases, you're going to want to go for a penalty abatement, and we're going to explain that process a little later here. Paying the IRS in full. If you can do it and you got the money, you're done. It's over. That's the easiest way to do it. But you're still going to see the penalty abatement explanation. And the other thing I would just add is, if you have way more money than the tax debt, you're not going to get a settlement anyway. There's exceptions, like if there's crazy medical bills coming up, sometimes you can get around it, but it's tough. I wouldn't, in way more than not, if you have more money, you're not going to be getting a settlement. It's just, unless there's some extraordinary circumstances, then that's the only way. So penalty abatements for payment plans and full payers. So a first-time abatement is easy. Pretty much what they're looking at is you could owe a series of years, you could owe 1 year, but if it's a series of years, you're looking at the first year in that series of years. If it's 1 year, it's just 1 year. And you're looking at that year and then the prior 3 years. So say you owed for 2010, 11, and 12. Did you have penalties on 2009, 2008, or 2007? And either paid off, even if they're paid off, having been on the system is what qualifies it to not get approved. So if you had a penalty on 2008, you're not going to be able to get 2010 abated on a first-time abatement. Okay? If you just owed 1 year, say you just owed 2015 and you just paid it off and you never had any other tax problems, you're probably just going to get a first-time abatement very easily. You just say, can I get a first-time abatement based on prior compliance? And you get it. So reasonable cause abatements are hard. And so say you owe 2009, 10, 11. Well, I got the first-time abatement on 2009. However, 10 and 11, you got to have the good reasons. And, people dying and it's somehow affecting how you filed your taxes, things like that. We've had cases where, there has been deaths, but the deaths didn't affect the taxes enough to get it abated. And reasonable cause abatements are very hard, but they're sold very hard to people too. So be wary of that and don't expect it. Reasonable cause abatements are tough to get. First-time abatements, you're going to get them as long as you meet the requirements in the computer and it matches up. And one other note I'll say on first-time abatements is you just want to it's another reason to not get little small amounts of penalties, because say you build up a penalty of like $100 some on one tax return, then 2 years later you got a $20,000 penalty or something else happened. That's why these mini penalties, just avoid them. If you're paying your return a little late and it's going to be a small amount of money and you're not in a tax relief situation yet, just go ahead and pay it. That way you're not going to disqualify yourself from a possible penalty abatement later that you might need for a bigger amount. So here we go for tax relief. Tax relief for debts that are not finalized or are related to a past audit or CP 2000 notice. So if you're in a current audit or CP 2000, you submit proof, and they're going to tell you your proof sucks or your proof is good and what else you should do, and get everything together, and you're going to deal with it and try to lower the balance as much as possible. If you're not sure what a CP 2000 is, that's like a mini audit. They're sending you, a request usually for one thing on your return, and it usually is due to something not matching up based on other data that was submitted. For example, you submitted $100,000 in income and you have 1099s for $115,000. You're probably going to get a CP 2000 adding, $15,000 to your income total, and then you got to prove why you didn't get that, or what, or if it's or expenses related to it to try to bring it down. And with an audit, you want to show proof of the expenses, depending on how the case is, in different ways, mileage logs, things like that. You want to just bring the balance down as much as possible. Okay. The other thing is, you can also have, when an audit is closed or CP 2000 is closed, you can request an audit reconsideration. And this is essentially saying, hey, I have the proof now. Can you please reconsider this? It's not a right at that point for you to have that done, but the IRS isn't trying to make you pay something you really don't owe. So if you can prove, what it is correctly, it may be worth doing an audit reconsideration. And in any of these cases, what you're trying to do is just bring the balance down as much as possible with proof. Okay. And here's one thing to consider on audit reconsideration. If it's something where, say you owed $100,000 and you're going to do a reconsideration. And if all your proof is accepted, you're still going to owe $50,000. Okay, but your financials qualify for an offer in compromise anyway. It might not be worth doing the auto reconsideration. And in cases that we do, we always tell clients, if you're going to owe a large balance anyway, we might as well just not do the auto reconsideration. First off, your right's already gone, so it's a reconsideration anyway. Second, if the settlement is accepted, if the calculation comes out to, hey, we should settle this for $50 or $100, it doesn't matter if it was $50,000 debt or $100,000 debt. It's based on your financial data, what the settlement amount is going to be. So don't waste your time with an audit reconsideration if you're already a great settlement candidate. And if you don't get settlement, you can submit the reconsideration later. If you have a current audit or a CP2000, then you might want to deal with it now, before, you don't want to let it become a big balance and then deal with it later, because you don't know yet, But with the audit reconsideration, you can always submit it later when you're already out of that period of your rights to respond. And not sure what to do, you can just give us a call at 888-515-4829. Again, that's 888-515-4TAX, and we can help you resolve it quickly. You can also go to our website, which is trp.tax, and click the contact us area, or talk to our live chat, or give us a call, and we'll go ahead and do it for you.